What up, traders? What up, investors? Ken here from the Dyslexic Investor. We're going to be looking at the overall understanding of what Goldman Sachs is laying out as their roadmap. I'm doing air quotes on the potential earnings coming up in the coming year, on seeing a potential V-shape or more of a longer U-shape with more of a roundish into it, recovery coming back in late 2020 and early 2021 with this potential fear of a recession. So let's go ahead and just jump into the markets now. The SPY and the futures were we're not near that, so we're making a new bottom within the open markets here that are traded outside of extended hours. So that is quite key, and we closed below the low of yesterday. So potentially we could see a slight bounce tomorrow, maybe more to come. There's a lot of things that are moving around with the coronavirus and so forth. But an interesting article I found at on Zero Hedge is earning expectations are starting to plunge. Here's the most impacted sectors. And there's a lot of these graphs and sources are from Bloomberg and then also from Goldman Sachs Investment Research, their fact sheets. And so basically they're saying basically Q1-ish estimates need to be cut. And then long story short, we're going to have somewhat of a, not a V-shaped bottom in a recovery, but more like a U-ish, maybe a longer, like maybe a bathtub looking recovery. And then by Q4, expectations and earnings and EBITDA will be getting back to normal with most sectors. And I love the way Zero Hedge always writes the articles, is we won't be holding our breath. Because again, no one can tell the future. It's just kind of silly. I understand they're trying to give somewhat of a roadmap to kind of how to figure out this market, and I do appreciate that. And just kind of look at some of these numbers. So basically, a lot of estimates need to come down on revisions within the automobiles is number biggest one. And the lowest is food, because those are your basic necessities. So your foods, your basic needs. I don't know why entertainment shouldn't be lower. And then also meals. Food and meals were basically the same, like the basic necessities and shelter. Tech, hardware, airlines. So airlines and travel and hotels and leisure stuff, I feel need to be cut slightly more. This is where sometimes the article, I don't understand where they're coming from with this. On how clearly oil and gas is being beaten up beyond belief and so forth, but it's just very they're trying to look at it like this is something like we've dealt with before and we're just going to be going past it, and potentially earnings need to come down because a lot of the analysts need to cut things. So by that meaning, they're saying to cut earnings estimate, meaning that we can see a little bit lowers in the market within the next month or two, potentially 3 to 6 months. We can have more of a down market. I kind of have these trend lines here, so I kind of have these marks here on the weekly chart that I like to look at. I think it's kind of somewhat identical. I think we're gonna break the low. Don't know when or how or what's going to happen, but I feel like we're going to break the low from 2018, the Christmas Eve little rally that we had. A lot of things are just crossing over just on the weekly chart, so this is just extremely strong selling. I think everyone is in the U.S. is now getting a little bit more up-to-date information about the coronavirus and all the various aspects of that, and a lot of people that I know are changing their schedules, planning things around, and just trying to make better things. And I know Congress is doing some work this week on the sense of trying to create a PTO, paid leave, and help for people in need during these times, because the fact is that if you are a nurse and you have kids that go to school, but your county decided to close schools off, you have no basically daycare for your kids. So they're trying to implement some kind of plans to kind of help counter this. So this is on a weekly chart. So let's go to a full-on monthly chart, and you can kind of see here, this is, I'm not comparing this to 0809 because this is a little bit different, but I feel like this is going to be a lot like the 2018 slowdown. But the only thing is it's starting to show signs. So I'm actually going to get this out of the way so we can see this better. So the 8 did cross through the 5 crossed through the 8, which we did see that back in 2018. But the 5 or the 8 never crossed below the 21 on the monthly chart. That being said, I think that could happen due to the ongoing selling, and what's going to happen, which is the Goldman Sachs report, is they're going to be able to have to cut estimates. And by cutting estimates, you can just look at BA. Like, that's what happens when S hits the F. That is a drop from just this year. It was at $400 last year. Wow, that's crazy. I am so glad I got out of this. That was a heck of a drop. Basically got a well over like a 50% haircut. Yeah, 54% haircut. It's just been trading terribly. And if you look at a weekly chart, it's getting down to its all-time lows on a 3-year basis. And then you go at a monthly chart. This is the kind of where it flashed me warning signs. Was this down here, the TTM squeeze, the John Carter squeeze mentality of how he indicates this through momentum. So if these are squeezing and the red is pointing down and a lot of the moving averages are below the 21, it's most likely going to pop substantially lower. And that's exactly what you saw here. So I can see that this selling can continue. Maybe not as steep as this ginormous red candle, but I can definitely see it coming down to like the 130 level for BA. That is very much in the works potentially, unless they literally get a full-on bailout, which that was not even talk about the B word yet. So that being said, it's going to be a super interesting day. I just wanted to leave you with a couple other little stocks that I'm looking at. I currently have AMD. AMD has been holding strong. Like, look at this, we just pulling out on a weekly. On a weekly, like, what's going on? I don't know what the coronavirus is. This has just been jogging along just slightly. The sad thing is I think they're going to have to cut earnings as well, because with so many factories and exposures overseas and all these other incidents coming up, and it's just going to slow down growth. People are going to have less cash to buy things, less like the upgrade. Businesses are going to hold cash more instead of investing. On a monthly chart, doesn't look like anything has happened yet. This thing has been holding super strong here, super strong. Activision Blizzard, hey, the new Call of Duty free gameplay is out. Yeah, I'm downloading it right now. That's what's going on down here. I want to check it out. I would love battle royales. So that being said, looking at this on a weekly chart, I added actually this today because it was down substantially, and I probably added it around a little under $60. This is becoming one of my core positions because I really understand video games and I understand esports, being a competitive Counter-Strike player in the past, and then having just the knowledge and the fun of how much video games bring to me. It's just fantastic. It's kind of I won't say no-brainer. I never like to say that, but I actually got in heavily within Activision Blizzard once the sell-off happened, and I was like, it's a complete mistake. But that being said, I love Activision Blizzard here. Potentially can go higher. Waste management, people are going to need to pick up their trash. The only thing I'm slightly scared of on this is the 21 is the 8 is cutting into the 21, and that could potentially, this thing doesn't move too crazy as you can see here. Let's just pop it out on the monthly chart here. Doesn't have crazy moves. Even during the recession, it got maybe like a 45% haircut compared to a lot of other people. I needed to keep it above 105. It needs to stay above 105. That's kind of a key point. It can go through it, but it needs to close above it on the monthly chart. Because you can kind of see here in early 2015, mid 2015 really, it kind of tested it. But if you want this trend to continue to hold, it needs to stay above 105. So actually, I'm going to put I I don't know why alert has not gone up. If it goes below 106, let's put that there. So that's that. Guys, thank you so much for watching. If you have any questions, please leave it down in the comments down below. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!